Hi friends, this is Partha. Welcome to my YouTube channel, Moonlight Trading. This is a post-market analysis for 27th Feb 2023. Here we will be discussing broadly Nifty, Bank Nifty, and a few stocks which have caught my eye. Let's see how it is. So today this is my setup where I have four moving averages: 18, 53, 89, and 233. I've explained the significance of these averages in my previous video. um, Basically I don't want to get stopped out, so I just don't want to take a general 220, 50, 100 and 200 averages. Rather I prefer averages which are above and below them so that I don't get really stopped out. So don't focus on the number actually, but the overall setup. So I have four averages and two super trends that are drawn, and also I have a RMI, Rohit Momentum Indicator, which is taken from Sher Khan. So this is a daily analysis. So although people would say that today has been a decent day, where there has been an increase, or I would say a short covering from day's low, from 17,392 to almost 17,509. One thing that I've really observed was market, as we know, has changed its structure dramatically. This is the first day when Nifty has managed to close below 233-day moving average in last 6 months almost. If you see here, on 29 September, it has touched and has shoot up 2000 points. And on 1st of Feb, on the budget day, imagine the volatility on a budget day, but still it has respected 233 and shot up. Now, that is the significance of a support where on a high volatile environment as well, it has taken support twice, thrice, and actually gone up. Now that particular support which is taken has breached. Entire day it has been trading below, and mind you the close is also actually below the support 233, maybe 2 or 3 points. But the important thing to note down is, yes, there has been a short covering, but why don't you exploit? It is obvious that there will be a short covering because there are 8 days of market being sold into. Another important observation which we need to make is, say, let us rewind a bit and take a weekly snap. Come 2020 March, there has been COVID and market had a vertical fall, and again from then it has just increased one way, one directional from 8 to almost 18,000. And this is the place where the moving average and super trends are below, and that has created a nice risk reward, um, in favor of risk reward to go long, and that has fructified. In last 1.5 year, that is almost October 2021 to till date, market has been just zigzagging. Down 1,000 points, up 1,000, down 1,500, up 1,000, down 2,000, up 1,000. So it has been just zigzagging, not a unidirectional move. So everyone, almost all the retail participants and major participants have almost assume that they have a recency bias. They expect market to behave the same way, the way it did last 1 year. So they are expecting market to actually, you know, increase after the fall. But two observations that are key is this downward sloping channel on a weekly. Continuously, it has been respected for 3 months before Adani news, before budget. From that day onwards till today, 1 month after the entire saga, still this has been respected, which means, and there is a bearish biasness in the market last 3 months, and hardly there has been any trend which actually respected for 3 months, and that too without a volatility. You see here it has just respected for 2 months and there has been a short covering, respected for 1 month, short covering, 1.5 months, short covering. But here it has respected for almost 3 months, and people are expecting short covering, but that I want that that will happen. So if you zoom in a bit, what happened before was, I am removing the supports for some time to give you a clear perspective of the setup here. So on 30th of September, for 3 straight weeks, it has taken support on the super trend 2, and it managed to close above, and then it has shot up. Now it has actually came into the super trend 2 and 3. So this is a sideways price trapping mechanism where you better to play this non-directional, all if it is between 2 and 3. And now here it is kind of taking support at super trend 3. But the underlying tone, the red line is above the green, indicating bearish. If you go zoom in a bit, take a daily view, as I said, first day below EMA 233. If you zoom in a bit and take hourly view, that is clearly bearish, where even though there has been a short covering, but the price is below all the averages. So how should you play such a move then? If you are an aggressive trader, I would say aggressive swing trader, I would say have stop loss of 565 on an hourly basis and be short. If I what if I am say a daily a risk averse trader, a swing trader, then what I would do is I would mark the ranges. So basically the swing high is 17,700, and here the swing low is approximately 17,400. If it is between these two ranges, I would be sideways, non-directional, play with triangles above and below. So sell call above, I would sell call above 17,800 and sell put below 17,400 or so. If 17,400 for some reason breaks on a closing basis, then I would be bearish with immediate target of 16,800 or so. Yeah, it looks possible because as I said, everyone is having this recency bias where after 1.5 years they are thinking that, oh, after the down move 3 months there will be an up move, but it need not always be. Considering the slope is not too vertical, it is very, I would say very about 20 or 30 degree the slope. So which means such trend lines are respective for longer durations. Vertical trend lines where the angle is quite high, like 60. If they say, for example, you take a trend line like this, right? A trend line like this is somewhere around 50 or 60. Trend line like this is 60 degrees, much steeper. So steeper trend lines are respected for shorter durations, and less steeper trend lines are respected for longer durations. So that's what I observed here. So what I think is, although we have taken EMEA 89, that is exponential 89 support on Nifty, and we have shot up, I think this time, I would say maybe before the elections, maybe before the budget or the next 2024 elections or so, we somewhere we have to test the 233 line. We did it for 18, we did it for 53, we did it for 89. 233 is pending, we shot up, and now this 3 months downward sloping trend line indicating that the bearishness exists. RMI also indicating the same, and the structure also, immediate structure also indicating the same. So I would, my bet would be on staying bearish with 17,600, 560, 600 being this stop loss on the close, not on the touch. And the target I expect 16,800 to be tested. So that's my view on Nifty. Now let's go and check out what's happening on Bank Nifty. Bank Nifty is a bit bullish than Nifty here, where the movement here is actually on the upward side today, where there has been a good short covering that has happened. Let's see a daily chart. So why would that happen? Because it has taken support on 233 second time and it is moving up. Now the big question is, can it manage to close above 41,000? If yes, the sideways movement will continue for some more time. If it breaks 39,600, then it is full to bearish. If it breaks above 41,700, then it is bullish. So I am waiting for 39,700 to break down. to go short, because RMI is also negative, and if you see the volumes are also quite high when it has fallen, which means there has been quite a lot of fresh positions that have been built up on the short side. Now about a stock which has caught my eye. The name of the game here is volatility. The stock name is Adani Enterprises. This stock has been respecting the structure for several years, I would say, on the long side. So it has broke 232, where the price was actually above all the, if you zoom in and see, it has been above super trends and above averages from almost 300 levels, and never ever broke it down. Never. Be it Ukraine war, be it inflation, be it what nonsense, any bad news has been kind of taken into, and this was the first day, first week where it has broken at 3209. So, and also RMI has turned bearish, and also there were volumes. So these were the signals that it was giving, that all the positional long should get out, and then it made a fake up move, and it has been dumped, where it has been kept for almost 3 months, and from there onwards it has been dumped, and the dump was like absolute chaotic, where the previous low is 964 and the 233 average is somewhere around 1500. So I would expect this stock to be, although on a day-to-day basis you see 10% up and 10% down days, but broadly I expect it to consolidate if it has to sustain, and for at least another 2 to 3 years, maybe in a range of maybe 1500 to 900 or 1000 maybe. So closer to 9000 I would buy, closer to 1500 I would sell, and that would be my way of approaching Adani. I'm quite hesitant to play any directional moves here, Adani, because already the price, if you see on a daily chart, is quite far from averages. 200-day average on daily is at 2300. My goodness, that's almost 50%. So there is no way that you can be directional, because the directional move has already been played from 4000 to 1200. So although RMI is showing negative, but I would prefer that this entire negative has already been played in the month of Jan and Feb. So the best way of approaching Adani is sell the strangles with hedge, and enjoy the month, enjoy the theta decay that it gives, maybe 1000 and 1500. Enjoy 50%, close it, switch to another month, again enjoy the 50% premium. Keep repeating it till you face a loss of 1 month or so, in any, say, 50% of the premium as a stop loss. I would suggest that's the best way of approaching Dani, rather than going directional buying puts or selling calls or buying futures. I'm quite hesitant into being directional on Adani. Let's see. My view overall is neat and clean. It is bearish. Sell on rise market. Nifty as of today looks a bit bearish than Bank Nifty, but I don't give that much importance on a single day moves. I am bearish with a target of 16,800 or so in the near term. Thank you, folks. Thanks for taking time and watching this video. Let's meet up again tomorrow. Thank you.